Hi, everyone. Welcome to FoxNews.com Live Business. I'm Diane Macedo from the Fox Business Network, and I'm joined now by Todd Schoenberger, the Managing Director of Land Cult Trading. Did I get it all right?
You did.
All right, we're off to a good start. So, Todd, let's start off by talking about jobless claims. This report got overshadowed a little bit this morning by news out of Europe and some earnings reports, but 418,000 new jobs. We're up again. This is the 15th straight week now that we're over 400,000.
Right.
What does it all mean?
It's horrible, and not to mention the fact the 4-week average is at 424,000 right now. Look, the labor situation in this country is obviously horrific, but we haven't seen anything that is actually showing any improvement. When you see these first-time jobless claims numbers, especially during the summer, which has historically shown a weakness. I mean, you wouldn't have these types of pops like this. You'd actually should be under 400,000 just from historical perspective. But it's a very bad situation. Don't forget, 2 weeks from tomorrow, the July non-farm payrolls report comes out. And all eyes right now, there are some economists down on Wall Street right now that are predicting a 9.4% unemployment rate. That will be up 0.2%. It's absolutely looking horrible right now and for the rest of the summer. So I'm not optimistic.
And how do you judge the balance between whether this number represents a good thing because it's more people that are actually trying to look for jobs, or whether it's a bad thing because it's more people that are now laid off?
You know what? You actually bring up a brilliant point, and I'll tell you what, the way the traders are looking at it is that bad news could be good news, and good news is great news, only because of the Federal Reserve. Look, right now, the Federal Reserve, they expired quantitative easing too, and now during the Humphrey Hawkins testimony a couple of weeks ago, you had Chairman Bernanke. First half of it, he comes right out and says, hey, I'm open for a QE3. What traders want to see, we're not elected officials, so we want to see a QE3 because that's going to be great for stocks. So what is going to be the octane? What is going to be that's going to push him to pull
What's going to motivate the Federal Reserve to take that step?
Exactly. So when you have bad news like this, if the unemployment rate goes up, if jobs right now, 18,000 last month, how many are we going to see this month? So if you start to see that deteriorate even more, plus GDP, don't forget, that's the wild card of it all. We could fall into a recession again by first quarter. If that happens, and the Fed most likely will get involved again, which would be great for stocks.
Now, the other big thing that people were looking at this morning and that the markets responded to were a few earnings reports that came out.
Yeah.
Morgan Stanley particularly standed out, which was interesting because they posted a loss.
Yeah.
But not as big of a loss as was expected.
That's right. And if you look at the financials altogether, J.P. Morgan did great. Bank of America, nothing. Goldman, obviously, disappointed. So from the financials, from that perspective, Morgan Stanley has actually done okay. Keep in mind, they have been involved in some great deals lately. They were the lead underwriter in the LinkedIn deal, also with Pandora. They're also, there's talks that they're going to be the lead underwriter for the Facebook IPO that's going to roll out. So when you look at some of the bigger investment banking deals that they have had, that's really helping their bottom line. The question, though, is about trading. Trading volumes have been just abysmal. They've been extremely low. If you take a walk down to the floor of the New York Stock Exchange, you can feel like you could take a nap. Oh, it's so quiet. If I'm down there, they tell me to be quiet. So here's the thing, though. That really will impact their bottom line from a trading perspective. So what they need to do, and you've been hearing this up and down Wall Street, is about pending layoffs. So if you have a number of layoffs that are going to occur, clearly that is going to help them maybe down the road. But right now, they did surprise on the upside, so not as big of a loss, but we'll see what happens.
And AT&T topped estimates too, despite being really unsure about whether or not they're going to be able to pull off this T-Mobile deal.
Yeah, and not to mention the fact, don't forget the iPhone. And you had so many
Verizon now has the iPhone.
Exactly. So AT&T, I think the expectation was that they weren't going to have a big quarter. Because of that, we figured Verizon would. And Apple obviously did. They were lights out with their earnings report. I think when you look at all the numbers over and over again, though, AT&T will continue to do okay down the road. But it's almost like a utility stock right now. It's Ma Bell. So you think about your shareholders. Most of your shareholders are retirees. They're collecting that dividend. I would probably stay away from AT&T only because even if the T-Mobile deal does occur, it's one of those companies that you're just there to collect the dividend. You're not going to see a lot of growth out of it.